American consumers are showing signs of strain. Retail sales rose just 0.1% in April, sharply lower than the 1.7% increase in March. Economists say shoppers may have stocked up ahead of tariffs, yeah, no kidding, and are now pulling back on spending. The Fed chair says tariffs may cause increased volatility in the months ahead, and that could cause a problem for the central bank as well. Listen to this.
Higher real rates may also reflect the possibility that inflation could be more volatile going forward than during the inter-crisis period of the 2010s. We may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and for central banks.
Simeon Siegel is a senior retail and e-commerce analyst at BMO Capital Markets, and he joins us now. I really appreciate you being here because for so many weeks now, the data has been incredibly noisy. I mean, what's your read on where consumers are right now and if the worst of that tariff fallout is yet to come?
Thanks for bringing me on for such a cheery topic. This is great.
So you can correct me, you know.
I do. Well, by the way, I do love, I'm an analyst. I work at a Wall Street firm. I'm not supposed to be optimistic. No, but I do love that you said it's incredibly noisy, the data, not it's incredibly negative, because I do think we have to acknowledge we have been worried about recession for a while. Like we had this COVID bliss, which sounds ridiculous, but with stimulus giving everyone a lot of money and the fact of all the supply chains we kept hearing about, I mean, there was no product on the shelves. It was a good time to spend if you could find something to spend on. Let's just think about Pelotons and dumbbells and everything else that went out as soon as it hit the floor. We've been talking about the next year until about now. People have been worried, when does that get tougher? Because we've had this thing called inflation. Tariffs just compounded that. But I think what's important is even if we look at this retail sales number, that's sequential. Year over year, there's still growth. And so what's interesting, and my buddy Nathaniel, who you just spoke to, was on, like, yes, we're talking about Walmart, which obviously is a huge business and represents a huge swath of US spending. They still grew year over year. And so I think that another company that reported, a lot smaller, but another company that reported today was Birkenstock, and they are talking about price increases. They are talking about brand strength. They're talking about people willing to spend. And so I do think there are different versions of the data when we look at them where they're winners, they're losers. And I think it's not just high versus low income. I think it's just an important message that we should keep, I guess, watching.
Yeah, but also to get more to that kind of, I wouldn't call it contradictory data, but just other data to look at. We've heard theories in recent weeks that historically low consumer confidence does not always translate into less buying, right? People feel unsure right now, but they are, by and large, employed and they're still spending.
By the way, it's not only that it's not always, it's rarely. Like the correlation, right. I don't know if you've ever filled out a survey, but I can. I'm gonna acknowledge on national TV, international TV, that when I fill out a survey, I'm not always telling the truth. Like it's just what you believe is very different than what you spend. And I think that's really important. And so, yeah, I think what we know, healthy or not, the US consumer is overly resilient. Wise or not, the US consumer spends oftentimes beyond those healthy levels. And that's just a reality. And so that's what I think is so fascinating, that what we are seeing, we are, again, that Walmart number, Walmart's revenues went up. They're like year over year. And so I think we give customers a reason to shop, and they're shopping. And obviously there's a difference between discretionary and staples. There's a difference between a quart of milk that you need versus a pair of Birkenstock sandals that you want. But I think what we're seeing is on both fronts, there are people that are willing to open their wallet, even if it hurts.
And we get to the point about whether or not it hurts, and the point about, you know, prices, inflation. You obviously deal with e-commerce as well. We had this issue of de minimis. I'm not going to explain what it is, but to remind our viewers, we had an exemption for that, for goods coming in from China, $800 below. It was basically what I call frictionless trade. That apparently is still gone now. It will be gone. Do you see the upheaval in the supply chains? Do you see that putting pressure on prices? And at the end of the day, if it does, consumers still only have pretty much a fixed amount of money to spend, even with the credit.
So I think you're exactly right. I think that point, consumers only have a fixed amount of spend, is a very important point that I think does get a little overlooked. We are of this view because tariffs really haven't been a huge thing in our lives. So we think about them in terms of classrooms. In the classroom, and every economist who's a lot smarter than I am is going to say everything I'm saying now, it makes no sense. And that's okay. I'll go with it. But at the end of the day, people are believing, people want to say that tariffs are giving companies the right and the permission to raise price. That's not true. Tariffs don't give you the right to raise price. Shoppers give you the right to raise price. And so if the shopper, you can raise price all you want. If the shopper says, I don't have the money, I'm not taking that price lift, I promise you promotions will come back. I promise you discounts will be there. Now, that, again, quart of milk versus something more want-based shop, piece of clothing, is going to be different. And they're going to have to decide where they're willing to allocate those dollars. But just because your costs go up, don't mean your prices do. You might want them to, but you have to have a strong brand. You have to have a strong, compelling argument. You have to have customers that are willing to say, okay, I get it. I need to, or I want to spend on this product. And I think that's where we're going to see a big distinction. It's not just tariffs, therefore spending. And so I think that's a really important point. And so that's where you'll start seeing that wallet tighten, as you're talking about, that if everyone feels flush because of stimulus, then anyone can raise price. But now you're going to have to find, we're going to see who's allowed to raise price.
Interesting. Simeon, thank you for your insights. Again, it's about uncertainty. It being uncertain doesn't mean it's good or bad, or good for everyone or bad for everyone. And we will continue to see what this trade war brings us. Simeon Siegel for us. Thanks so much. Appreciate it.